Hello and welcome to another podcast by State Street. My name is Gary West and I'm the Senior Manager, Media and Communications with AIST. I'm joined by Peter Sherriff, Director of Product Strategy Asia Pacific at Charles River Development. Today we'll be discussing the changing operating environment for superannuation funds and a shift towards a whole of fund view. As a result of greater internalisation of investment activity, funds are now looking to extract more insights from growing volumes of portfolio, market and reference data generated across their books of investments. So Peter, welcome. I think a great way to start the discussion today would be to cover what we mean by a whole of fund view and perhaps a little background on some of the key drivers behind this shift.
Yeah, thanks, Gary. Happy to be here and thanks for the invite to participate. A great question. I might just sort of start with a little bit of the background. Over a number of years, obviously, the regulatory environment for superannuation has been changing, with sort of increased focus on transparency, particularly with regard to transparency of information provided to the regulators, but also out to the members. And we've also seen sort of a real push from the regulator, if you like, to sort of weed out some of the underperforming funds. And that's really sort of led to a number of consolidation plays within the industry, as well as funds growing more organically in size and scale as well. And I think it's really that combination, if you like, of sort of that change in the size and scale of the organisations, and also that regulatory scrutiny that's sort of driving a need in the industry to better understand what the whole of fund looks like. So that sort of really brings us to what that sort of means in the industry today, I guess. So when we talk about the whole of fund, with our clients and with other market participants, what we're really talking about there is at that sort of, I guess, high level legal entity. So for a superannuation fund, that is the entire pool of assets, irrespective of the way that's broken down into the different member products that they offer. So that spans a mixture of the internally managed assets, as well as those assets that are managed on their behalf by the externally appointed mandate managers. It incorporates the public market assets. It also incorporates the private assets, which is a significant sort of part of the book today. And obviously we're sort of seeing increasing allocations to those sectors as well. So when we talk about the whole of fund, it's really bringing together the public, the private, the internal, and the external, so that at any given point in time, a CIO, a COO, the investments team, the investment ops team, really sort of any interested party, has a really clear view of the exposures across the fund, across that range of assets, and being able to really sort of go down to the level of understanding the individual assets that make up the overall fund in its entirety. And then really obviously being able to break that down into those member-facing product levels, so you can sort of do that slicing and dicing and the different types of analysis that really drive the investment decision-making side of things. I think sort of some of the other drivers that we see in terms of what that means from an operating model perspective and the shift to really look at the whole of fund is that increasing focus, as you touched on previously, Gary, the internalisation of some of those investment functions. That really means funds building up front office investment teams full of portfolio managers, traders, etc., in many cases for the first time. And they bring with them expectations of the information, the data delivery, the timeliness, the accuracy of information that they're looking for. And I suppose trying to align that to the member interest test, trying to keep costs to members low, that often means that these professionals are looking for scalable, modular enterprise solutions that are delivered via the cloud and sort of often backed by a range of services to really help, I guess, keep those costs low through leveraging the scale across more commoditized pieces of the investment life cycle and allowing front office professionals to focus on the business of managing money. And ultimately, that's where sort of the internalization piece is sort of taking the funds, is looking at how to deliver better returns for members at lower cost. And that sort of really is where the drive comes for this whole of fund view.
The case for diversifying traditional 60/40 portfolios has been widely acknowledged, and we see funds continuing to increase their allocation to private markets investments. What are the benefits of a whole of fund view from an investment management perspective?
I think ultimately it comes back to really understanding that exposure view, what some funds term as being the exposure book of record. I don't really want to sort of confuse the book of record conversation. It's enough to talk about IBORs and ABORs and CBORs, but really, when we talk about an exposure book of record from the point of view of our clients, it's really from an investment perspective, understanding what the current exposure of the fund is. Where that's done well, I'll say, what we're seeing is that sort of really enhancing the timeliness of information to support that investment decision-making viewpoint. So when we really sort of talk about that whole of fund view and the benefits it brings to the investment managers, it is being able to see at the start of day, consistently, every day, that where the fund exposures sit across public, private, internal, external, at that point in time, not at a point in history a few days ago. That means you can more readily identify the exposures and the concentrations across the book. And if you think about some of the recent occurrences in the market around things like Credit Suisse, Silicon Valley Bank, and others, knowing immediately when the news broke about some of those challenges, being able to identify immediately the total amount of exposure you have across the book to those funds and being able to take decisive action is pretty critical. It also means when you're looking at things like sort of stress testing and doing sort of scenario analysis type of work on your portfolio, really looking at sort of that exposure to whether it's inflation or again sort of topical lately, if you like, to the interest rate sensitivity across that whole book of assets, including any private credit or private property that you might be invested in. It really allows you to undertake a more meaningful set of stress test and scenario models across that book of assets. Importantly, as well, it sort of brings efficiencies across the operating model to be able to see that whole of fund instead of having that sort of siloed approach where different members of the investment team and investor operations team are exporting information into Excel spreadsheets, moving it around the business, importing it to other systems, potentially have different communication channels for different asset classes, down to custodians and other service providers, eliminating some of that inefficiency and bringing it onto a single whole of fund platform. Obviously sort of addresses a number of those operational risk and operational inefficiencies across the business as well. That's really around data management, sort of data governance, being able to bring that information together in a way that can present that information seamlessly to different parts of the business, with an understanding of the different roles they play and the different lenses on which they want to interrogate that data is sort of key, if you like, in being able to deliver those benefits to the investment team and equally to the investment ops team, and from there down to the members as well. Because fundamentally, if you have better access to the data, you have more confidence in the timeliness and accuracy of that data. It enables you to do sort of much more in terms of that member engagement, which is something that's really important to pretty much every fund we speak to today.
How do you see funds embracing the change in their data technology stack to ensure that they can meet the ongoing requirements of regulators and their members?
Yeah, great question. And I think it's the member piece that comes to the fore, particularly with the profit to member funds. Obviously everyone is in competition, if you like, for member flows today. So being able to engage with members, being able to get people sort of interested, if you like, in the investments that are in their super, getting them to, I guess, have a sense of brand loyalty to the fund that they're invested in is important. Being able to provide more information in a user-friendly and I'll say importantly, increasingly mobile way is important to members, particularly those younger members that are obviously going to be the future of the inflows into these funds. So for members, it's about being able to sort of really understand where their money is invested, whether it aligns to their own sort of personal beliefs and value systems. So being able to provide that information out to members, is going to be critical to funds that are really looking to get their members engaged actively with their funds and create that sort of sense of loyalty. On the regulatory side of things, I sort of touched on this earlier, it's very much about increasing transparency. The latest push has been really around some of those private assets and having better visibility, better granularity, and better understanding of the valuation of a private asset and the exposure to those in particular. But even before that, we sort of look at some of the portfolio holdings disclosure requirements, and that sort of needs to be able to go down to the individual asset level, regardless of who the manager of the underlying sort of assets are. That drive really is only sort of continuing, if you like, to provide increasing amounts of transparency and visibility at that most granular level to support the regulatory side of things. And as we sort of push through more of the performance tests and sort of other stress testing type of requirements that the regulator is increasingly demanding of trustees and of funds, again, what that really drives is a need for a timely, accurate, granular source of truth across that universe of investment data, so that pretty much no matter what the regulator comes up with next in terms of reporting requirements, in terms of those transparency needs, that can be more readily satisfied than has been in the past with the siloed systems. And I think sort of when we speak to participants in the industry today, all of them really are looking for solutions that provide them with well-managed, well-governed data across, whether it is the securities, the positions, the ESG information. So regardless of whether it's internally or managed assets, that is what they're pushing us to deliver to them. And every conversation we have effectively comes back to that need for data solutions, and particularly well-governed, well-managed data solutions that are provided in a cost-effective manner to benefit the funds and especially the members.
The timeliness, accuracy, and granularity of data has been a key theme of this conversation. What are some of the considerations that funds should have in mind as they work towards getting their data management fit for the future?
Yeah, I think in some ways this is sort of an easy one to answer, if you like. So I think everybody in the industry is really saying the same thing, which is having access to that information without having to necessarily employ large numbers of data or investment operations professionals who are at a premium in this market is critical. Pretty much everyone we sort of speak to is really looking to work with sort of smaller numbers of increasingly strategic partners in terms of delivering solutions that are fit for purpose for regulatory requirements, for member needs. But as that internalization continues to gather pace, as funds start to increasingly look for more investment opportunities internationally, and as they increasingly, again, move more into the private asset space, having somebody take, I guess, the legwork out of collating the information from those multiple different sources, aggregating it and normalizing it into an easily manageable, easily sort of queryable data set to provide information and insights to the different teams, and making sure that data is delivered consistently in an accurate and timely fashion. That's really every conversation that we sort of have with funds today is how can we as a technology and service provider help them achieve those goals with a low footprint of internal staff. So when we sort of talk about the considerations that sort of funds should have around data management, part of it is obviously around what are the technology solutions? What does the software side of things look like? How does that software provide scalability? How does it provide sort of future proofing in terms of understanding public and private market assets? How can we sort of bring that information more readily to the fingertips of non-technical users, reducing what we sort of refer to as the time to insight from all of that information? But also it's about how much of the workload can we take on from a servicing perspective. So there are obviously bits of information that are going to be sensitive to the fund, or bits of information that they may consider to be proprietary, but in reality there's not really a whole lot that's proprietary, if you like, in terms of coming up with a view of what a security master looks like in terms of its issuer or its price, or perhaps some of its sort of ESG metrics if you've decided to go down the path of using a particular provider. So that more sort of commoditized, more standardized information, if you like, the consideration then is what can your service providers really do in terms of helping manage that sort of more commoditized data for you in a very sort of well-governed, scalable way, that allows funds of any size to realise the benefits of scale of a significantly larger organisation that they're partnered with, but also that service layer has enough flexibility to allow as much hands-on usage or as much as many touch points as the investment teams would like as well. So one of the other considerations that we think is important, and our clients are telling us is important, is really operating on more of a shared technology platform basis. Again, that eliminates the friction of moving information around, that reduces operational overhead and operational risk. It means that clients aren't having to reconcile data as it moves around between service provider platforms and their own internal platforms, because that's one and the same thing. It also provides a lot of transparency and traceability around the information. So I used the term defensible data earlier, and what I really mean by that is if an auditor, a regulator, or somebody internally comes and challenges a particular piece of information, wants to understand how that information has been arrived at, being able to immediately access the system and understand where that piece of information came from, how it's been transformed, what governance and quality checks that has been through to arrive at that final result. I mean, to see that immediately on the platform on which that information has been managed, governed, and published to the consumer is also significantly more effective and efficient than having to work out what you did with that information internally, which service provider it came from, and then go and work with the service provider for them to give you the lineage or the history of that piece of information throughout their processing chain. So we really see that co-sourced or shared technology platform as being increasingly important and delivering increasing benefit to the in-house data teams and the in-house investment teams.
Bringing it back to the whole of fund view, what should funds be thinking about in terms of incorporating better liquidity management, risk modelling, and portfolio management into their technology infrastructure?
Another great question there, Gary. I think the things that we're really seeing is, as demands from, again, regulators, members, and internal investment teams really increase, what we're seeing is there's a lot of information, at the portfolio level, the market level, reference data, third-party sources around ESG information that gets incorporated and aggregated with that exposure information we were talking about earlier. Really, I guess, again, we go back to events of recent history, if you like. During the pandemic, we saw there was that early release of funds that was made possible without a meaningful exposure book of record view, without a view of the cash flows into and out of the fund. It becomes very hard to manage those unexpected liquidity events that may impact a fund. And equally, as we start to look at the next set of stress scenario type of requirements, being able to understand both the macroeconomic exposures and risk points, whether that be to oil, for example, or whether that be to carbon factors, are the types of questions that we see funds asking themselves around that whole of fund management. And a lot of that is really being driven, I guess, by the need to start to look at how best to generate incremental alpha across the fund in a world where the performance tests are really driven by the strategic asset allocation of the fund, and where those are targeted to specific government mandated benchmarks for each of the different asset classes. So what we really see with some of the more sophisticated funds is they're looking at ways that within that asset allocation framework that's mandated from a performance test perspective, they're looking to be able to identify opportunities that provide the right level of return, the right level of reward, without creating levels of risk concentration that maybe don't align to the appetite of the fund. So I suppose doing more with the risk budgeting in terms of the alpha generation within the fund. To be able to do that, it's really important, again, to be able to have access to that accurate and timely data. So coming back once again to that exposure book of record being critical, but being able to overlay that with complex risk factor model data with that ESG data, so that at any point in time, anywhere through the day, portfolio managers, investment teams, heads of asset allocation, CIOs, understand exactly where the fund is positioned in near real time, so that as and when an investment opportunity is brought to their attention, be that by one of those external managers operating in the vein of a strategic partner, or whether it be from one of the internal investment teams, the investment committee can very quickly model out what the change to the portfolio, to the fund would look like by taking on that asset, both in terms of the exposure view at that sort of asset class level, but also being able to understand what that means in terms of the factor-based risk that it's bringing on, so that the fund is better positioned to ride out some of those stressed market scenarios. And I think the last piece of that, and again, sort of bringing it back to that sort of whole of fund theme, is ensuring that solution spans both the public and the private assets. Historically, there have been solutions that have been very good at sort of managing some of the risk and some of the liquidity on the public markets side of things, but the private markets has been sort of relatively opaque and sort of hard to incorporate into the whole. So increasingly, as we sort of look at how the funds are taking that sort of whole of fund investment type of approach, the model simply has to span the public and private. It needs to understand the liquidity profile, the cash flow expectations of the private assets in the same way that it does the public assets. And it needs to be able to map those private assets onto a set of well understood risk factors so that the fund can be viewed and modeled holistically. So I think as we sort of move forward over the next few years, we're going to see increasing demand from the funds for a true whole of fund, public to private, internal and external view of the exposure of the fund, incorporating all of those more advanced analytics that are important to the investment decision-making process.
Peter, one more final question, if I may. How far along the journey to achieving a whole of fund view do you think Australian super funds are?
I have to say that probably not as far along as they would like. We've had a number of conversations over recent years telling us that there has been a challenge in the industry to understand that exposure view at the current point in time. And I sort of touched before on the idea that historically service providers have sort of been challenged in providing information that's more up to date than a couple of days old. And that's really driven by the cycles of investment and fund accounting needs, striking formal unit prices that are used for unit price performance out to members and regulators. And that's obviously a critically important part of the process, where I guess we've sort of been able to take the industry and working with both some sort of large overseas pension funds, but also with some of the pension funds, the superannuation funds here in Australia, through that combination of technology and services and that sort of shared technology platform approach that I mentioned earlier. We have been able to deliver to clients a true start of day exposure for the fund across the public, the private, and the internally and externally managed assets. So from an industry perspective, we believe that is a problem that A, is solvable, and that B, that we have solved. And I think now, what we're sort of seeing is that increasingly the larger, more sophisticated funds are looking for those types of solutions. So the industry, as I say, has now managed to solve for that problem. And we sort of expect to see that the funds will move in that direction increasingly over the next couple of years. Now they can see the solution is real, as opposed to a technology vendor talking about a roadmap.
Peter, thank you for your perspectives today, and thank you, listeners. You can find a range of market insights and thought leadership online at statestreet.com/insights. We look forward to sharing more insights with you in our next edition.